Coming to the concept of consumable items. Now students, consumable items are those items which are meant for consumption during the same period, but sometimes it is possible that some stock is left over either in the beginning or at the end or in both the situations. Then you might have certain creditors or advance payments must have been made during the year. So how to calculate the amount that should be charged to your income and expenditure account? Remember, in this case, it is the matching concept that is followed religiously. That is, any amount or any expense, if it pertains to this year, whether the payment has been made or not, should be taken into account in this year only. Let us take an example. Like for the following information, calculate the amount to be shown in income and expenditure account. Payment made during year 2005 and 2006 is 23,000. Remember, this is payment made during the year. Obviously, since we are dealing with stationery, so it would be for stationery only. Then we have stock of stationery as on 1st April 2005. Remember, this is the beginning of the year. So this is opening stock. This is closing stock of 3,000. Creditors for stationery in the beginning are 9,000 and 2,500 at the end. So now students, payment made during the year. During the year, which is 23,000. That means you have paid 23,000 during the year. Then we have stock of stationery in the beginning of the year. Remember, this stock is something which was left over at the end of the previous year. So obviously it was not used in the previous year. You have used it during this year. So it is an expense of this year. So add opening stock of stationery 4,000. Coming to the closing stock of stationery. Remember, closing stock is something which is left over after this accounting period. That means this amount has not been used during this year, and obviously if it has not been used during this year, it would be used in the next accounting period. So it should be deducted. Less closing stock of stationery, that is 3,000. I'll put it in brackets so as to signify that this is a deduction. Then we have creditors for stationery. In the beginning of the year, we had creditors to the extent of 9,000. This amount of creditors actually related to the previous year. It relates to the previous year. This is an amount which you have not spent during this year. It is merely the payment that you have made during this year. So creditors for stationery, that is opening creditors, should be deducted. For stationery, 9,000 would be deducted. Then we have creditors for stationery at the end 2,500. So applying the same concept, this should be added. Closing creditors for stationery 2,500. Again, why they would be added? Because this amount relates to the expense made during this year. Although payment has not been made, since it stands in the credit side, that means payment has not yet been made. But as per matching principle, it is hardly a matter whether the payment has been made or not. Since this amount has been consumed during this year, it should be taken as an expense for this year. So it would be added to the expenses. Let us total it out and find the amount that would be credited or transferred to income and expenditure account. The total on the positive side is 27 and 29,500. I am using it as rough column, 29,500. Out of this we will deduct 12,000 rupees. So the balance would be 17,500. Remember, you do not have to show it. So students, 17,500 is the actual expense for stationery which should be charged to income and expenditure account for the year 2005 and 6.